Hello, I'm Jared Nelson, and welcome to Pros and Cons, the show where we take you through the risks and opportunities behind the trending ideas in the market. The reflation trade is one of the most followed macro themes this year. It began last year when Pfizer announced the success of its COVID vaccine trial. Investors immediately assumed that the vaccine rollout would be quick, and that most economic activities would swiftly rebound to pre-pandemic levels. The recovery would then increase demand for commodities, goods, and services, and depressed cyclical assets were poised to benefit the most. This reflation trade worked very well for the next 6 to 8 months. Investors who got in early made a bundle when commodities soared and shares of miners surged. Many cyclical sectors like airlines, small caps, and emerging markets rallied sharply. But that's history. Now the conditions that initiated the reflation trade have changed, some drastically so. Going forward, will the trade continue to be as profitable as before? On the positive side, the world economy is still humming. Many countries are recovering, albeit with deep variations across regions. Vaccines are being made and distributed across the world, leading to rising vaccination rates in more countries. Yes, we're not out of the woods yet, but close. So the reflation trade should continue to work out. On the negative side, pessimists will argue that most economies have experienced peak growth this year. The reopening euphoria in early summer has gradually subsided to the point that there are only downside risks. Even the International Monetary Fund predicted last month that risks around the global baseline are to the downside. More importantly, the U.S. Central Bank clearly signaled that it will start to taper the QE program. Specifically, the Fed chair mentioned last week about the coming reduction in asset purchases. This will increase economic and market uncertainties in the months ahead. No one knows for sure the timetable of the taper or the reaction of the market. In 2013, there was a taper tantrum when the Fed reduced its QE program. Will we see a taper tantrum 2.0 this time? Your guess is as good as mine. And then there's the Delta variant hammering some Asian economies, several of which are still in a lockdown mode. Japan and Malaysia are reporting more than 20,000 cases a day, while Australia is heading into the third wave. All these lockdowns are creating havoc with supply chains. Have you seen the rise in shipping rates? Staggering. On some routes, such as the Far East Europe line, the shipping cost for a single 40-foot container has surged by more than 1,000% in a year. The global seaborne trade is suffering from immense bottlenecks because of port closures in some Asian cities. For example, the Chinese port of Ningbo, the world's third largest port, was closed earlier this month due to COVID cases. This had major knock-on effects elsewhere. As you can imagine, skyrocketing shipping costs will push goods prices up significantly across developed nations and erode profits of major retailers. Shortages of goods are predicted. That's the unfolding macro background, but what's the market telling us? It appears the reflation trade is not yet over. For example, the $8 billion iShares Materials ETF is firmly maintaining its uptrend. Within the material space, commodities that the green economy requires, such as lithium, are still rising. Look at the Global X Lithium in Battery ETF, currently making new highs. Stocks like Albemarle are surging. And don't forget the financials. The rationale is that if the economy is continuing to recover from the pandemic, banks will do well. The iShares financials looks primed for another leg up. On the more high beta bets, small caps like the Russell 2000 remain near their highs. Pockets of speculative trading are noted. Look at support.com last week. In fact, even former leaders like Tesla might resuscitate their uptrends. Given the surging shipping rates, some shipping stocks may be worth a punt, such as Zim Integrated Services or Eagle Shipping or Breakwave Shipping ETF. And looking at Trackstar IQ, we can see that these are all tickers that are gaining interest amongst institutional investors. On balance, the reflation trade appears to be alive. If you agree with the proposition, then logically you would underweight bonds and overweight stocks. However, with looming uncertainties on the horizon, such as the QE taper or Delta variant, the trade will no longer be a straightforward bet on a speedy recovery. Expect some choppy waters ahead. That's all we have time for this week. To find out more about our Trackstar IQ data, sign up to our free newsletter at investingchannel.com/Trackstar.